Yo, 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 what's going on, team? It's Art, and I'm going to be going over my gold play, why I'm in, why I entered, blah, 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 where I'm exiting, XYZ, and overall just the mentality of this trade. I like doing these trade recaps because I feel like they're pretty informative for you guys when it comes to taking these trades and kind of, I guess, in hindsight. But I am currently swinging this play. As of right now, I am up $312 on my 25 contracts. I bought in when gold was at about, I want to say, like 161 and a quarter, and I've been riding it since then. Overall, I just want to show you guys the setup that I'm playing on and just how well this thing is going to be performing. Firstly, /GC, this is our gold futures. Notice that we are currently up almost 3/4 of a point, and in pre-market, that's sitting at about 162. Obviously, that hasn't updated just yet, but futures are moving quite nicely in our favor, and I do expect this position to pay us pretty nicely. That said, though, I am going to keep in mind that we are a little overbought when it comes to this trade. So I don't know if I would enter it going now, but that will obviously change when we see open tomorrow. This is as of March 10th, 2021. Today is Wednesday, and I plan on selling tomorrow, March 11th, 2021, on Thursday. So let's just go into this really quick. Firstly, I want to note that we did hold on to the 200-day moving average on the 5-minute chart. And also we have /ES and /NQ. These are SPY and NASDAQ futures being up as of right now. But we did end up holding on to this 200-day moving average. And notice we have a rounding bottom in terms of a 5-minute chart. That was partially what kind of like led me to believe that we'll see some sort of bounce today. Also, when you look at an hourly chart, this is an extremely obvious setup here. We've got one shoulder, here's our head, here's our other shoulder. We have a massive inverse head and shoulders pattern covering almost a week. So that is what kind of led me to believe that we would be heading up going into today and going into tomorrow. And that's why I played it. Here is my call out right there. I have a link in the description if you'd like to join. It's completely free. That said, we do have this nice inverse head and shoulders. Here's our head, shoulder, shoulder, and I think tomorrow we'll probably rip to around 163, 164, as long as we see these futures continue to head upwards. Also, I'd like to note that we had this crossover event right here on our MACD, as well as on the futures. But again, I would like to note that we are overbought. We are very overbought on RSI, and that could play against us. So that's why I plan on selling going into the AM. But I overall just wanted to show you guys why I'm entering these kinds of trades and why I feel comfortable swinging, along with why I took a 160 strike price. So again, let me just pull this up for you guys. So you can see right there that this is a 160 strike, and this is for the 1st of April expiry. The main reason why I choose something like this is because it has that extra insurance when it comes to potential downside. And with that extra time that I'm buying on the April 1st expiry, it gives me a chance for this position to mature. And so say it doesn't immediately go in my favor, or say, gold has a flat day, kind of like it did right here on the 5th of March, I'm not getting completely demolished by theta. And I think that is one of the most important things that you can do. I will always say it, contract choice is extremely important. I personally will not take anything shorter than 2 weeks. And I like to go about 2 strikes in the money. It may be a little pricey for some people, but I think the insurance is worth it. The way I like to put it is you wouldn't want to drive around a Lamborghini without insurance, or you wouldn't want to have a home without insurance. Because if anything were to happen, you will be eaten alive by expenses. I apologize for background noise. My little brother is playing Counter-Strike for a tournament. That said, though, I do want to really put emphasis on this. Every single video I'm pretty much going to talk about contract choice because it's an extremely important topic, and I feel like not enough people talk about a good system with it. That said, though, overall the trade came out very nicely as of right now, obviously. This is kind of looking at it in hindsight, but I am still in it and I am swinging. And I just wanted to go over a quick little procedure as what I do when it comes to selling a position when I'm swinging. So if I plan on selling in the morning, because we see /GC's up again almost 3/4 of a point, I like to wait about 5 minutes or so into open just so we can see the spreads of these positions to kind of close up. I chose the 160 call mainly because it did have a smaller spread at the time when I bought it. It was about a $30 spread, so I was fine taking the middle of $15 or 15 cents rather. in comparison to, say, the 165s or something that is out of the money, where I could see a bigger spread. And yes, it would be a lot cheaper. However, I would be taking the extra risk, and that is something that I'm not willing to do personally, because I'm more of a risk averse kind of trader. That said, though, I am trading options, so it's kind of a paradox in itself. That in mind, though, I did take gold, and it's because of this giant inverse head and shoulders. I cannot harp on it enough. You have to take these kinds of patterns very seriously, because if you're not just looking at overall trend, you will get eaten alive by this market, and it is very ruthless. So just, make sure you are checking on your trend lines, know exactly kind of what you're looking for. So at the time, you could have seen this as even a cup and handle if you weren't even looking at this, but common chart patterns are your friend. Overall, you're just looking for setups like this. We had the break of the 200-day moving average, which is why I entered. Notice right here, we broke 161. This is the 200-day moving average. And as soon as we popped above, it rocketed upwards, continuing into the end of the day. So that is another one thing that I do use. I use the moving averages. This is simple moving average, not exponential. I use the 9, 20, 50, and 200-day moving averages. And overall, I think they work pretty nicely, at least for my style of trading. That in mind, I am going to wrap up this video here. I appreciate you guys for watching. Feel free to like, comment, subscribe, leave suggestions, all of the above, and I will catch you guys in the next video. Peace!